Right, well, here we are again. It's another episode of Addy and Colin's occasional podcast series, which is based around our recent book we published. It's called The Rivers of Money, a social and economic history of modern oil trading. And we've been talking to various folks who were, in our view, seminal in their contribution to the development of trading in oil and in oil products during the course of the last 50 years. And so we're delighted to welcome today for this informal chat Nigel Superior, a hugely well-regarded and vivacious figure from many of the years that the book covers. And we thought it'd be great to get some background from Nigel on his career, and then we have some thoughts about some questions we're going to ask him about things he recalls from that time period. So Nigel, welcome.
Thank you very much,
Perhaps
Colin.
we can start off by by you telling us tell us a little bit about yourself and your career.
Yeah, fine. After university, I joined Shell in trading, which was really just coincidence more than anything, and was very lucky. I had a great teacher at that time, a fellow called Ken Hutchins, who bitterly resented the fact that he was given a graduate to take under his wing. But in fact, we got on very well together, and it was a great introduction. A year after that, I was sent to work for Shell Eastern in Singapore in refinery operations and trading, and again learned a great deal. It was the OPEC years, to be honest, that I started in the 1970s. OPEC was founded in the 60s, but it was really the 70s when it started to wield its muscle and increase oil prices. And I was there for the 1979 overthrow of the Shah, which really gave me a great focus on the supply side of oil. And it was a good 10 years until, I had an argument with Andy Hall when he screamed at me, buddy, forget the supply nonsense. It's all about demand. Which was a good point, actually, particularly as we went into the 90s and China became so important. The end of the 70s, I was transferred to work for Shell in Holland in technical functions, both as an economist and in the engineering side, which honestly were largely 5 wasted years for me. Then I went back to Shell International Trading in London for a year, which was a fascinating period because the future markets had really started, I wouldn't say to become important, but had started to trade volume. And one of my tasks at Shell was to look at them and decide whether they were any use to Shell. I had the pleasure then of meeting Michael Marks from NYMEX, Robin Woodhead of the IPE, and got on the IPE board. And both of these were thoroughly charming gentlemen. Absolute pleasure to know. I started to become aware of the importance of the derivative side of the business, what you'd call paper, Colin. It really changed the way I looked at things. It didn't particularly change the way Shell looked at things. I had to give a talk on oil futures to the board of Shell, and they were pretty ignorant and dismissive, actually. I mean, at one point they asked me explain the futures markets, and I said, well, in many ways they function very like Lloyd's do, in that the guarantee system, underpins the market. And I got a couple of blank looks, and then one of the engineers said, well, what is this Lloyd's place? Which shocked me at the time. And was one of the factors that contributed me to decide that really I should leave Shell. There were other reasons. It was a shock to come back to the bureaucracy of London office. And it was very clear that in my time abroad that Shell, the oil companies, had ceased to be the place to work, and that the action really was in the city of London.
And when you were with Shell, Nigel, you said you were in Singapore and you were in Rotterdam, and that was a fairly sort of normal thing, wasn't it, for graduates to be sent around different places? Did these companies, these affiliates, operate very independently in Shell, or were you really reliant on, the Home Office at Citco?
I mean, good question. When I was in Singapore, one of my jobs was buying crude for the refinery. I mean, it sounds more important than it was. We had a number of contracts, and I wasn't required to do a great deal more than manage them. And our principal contract for crude acquisition was, in fact, with Shell International in London. And the payment terms on that were that you paid at the end of the month following the month of delivery, whilst our independent contracts, which primarily were with Japanese trading houses at the time, were very typically 30 days after bill of lading. So it didn't take genius to work out that I would optimize our balance if I loaded everything from Shell at the beginning of the month, and thereby would get close to 60 days of credit, and took our third-party purchases towards the end of the month. And I got away with this for nearly 6 months before head office rang up my boss and told him this nonsense had to stop. So we seem to have had a few months of independence.
Far too entrepreneurial to be an oil trader, that kind of stuff.
One quick question, Nigel. When you were in Singapore, did you overlap at all with Ian Taylor?
I don't think we did. No. I mean, our careers followed very similar paths in many ways, but no, we were not there at the same time.
Okay.
Yeah. Sorry, so I interrupted you at the point where you were telling us that Shell, you'd had enough of Shell basically, and it was time to go somewhere. Tell us more.
Well, I built up a lot of contacts in the world of futures, and one of the futures brokers basically offered to double my salary if I went and joined them. And as I was desperately short of cash at the time because interest rates had soared and my mortgage was costing me in excess of what I could afford each month, I jumped at the opportunity and went to work for Rudolph Wolff, which some 9 months later was bought by Elders, and I came into contact then with Paul Newman. In fact, I ended up working for Paul, a completely untenable situation, and 2 months later I left for one of my better customers, which was Phibro. And I was hired by Switzerland. I mean, Phibro was quite an interesting company at the time. It had bought some 3 years earlier Salomon Brothers, the US merchant bank, and there was a clear tension in the company between the Phibro headquarters in Zug and all those working in the United States. And it was one of those rare cases where the the acquiring company, Philip Brothers, basically lost control. And over the 80s, we became, to all intents and purposes, Salomon Brothers. But anyway, I was hired by Switzerland to do products. I mean, I'd done a bit of trading of everything, really. So I was happy enough to go to products. And I worked there for John Lush, who gave me a remarkable amount of freedom, frankly, more than I would say would have been sensible. And after 6 months in Switzerland, sort of getting to know the Phibro system, he sent me to London to run a tiny little oil office in London. And I traded just about every single part of the barrel, with the exception initially of fuel oil, but I did start on gas oil, did jet, did gasoline, did naphtha. And it was hard work. I mean, particularly I started gasoline blending in competition to Vitol. And I'd like to think I ran rings around them for about 6 months before the sheer enormity of dealing with endless deliveries weighed me down a bit.
Complicated business, gasoline blending, huh?
It wasn't that complicated, frankly, but it was just very nitty-gritty, with endless calls and decisions to be made and qualities to monitor.
And at that stage, Phibro would have been top of the tree and Vitol a lot further down.
It depended.
They were not the company then.
It depended, to be honest, in which sector of the market. I mean, in gasoline, for example, Vitol was streets ahead of us. But my life really changed when a fellow called Nick Calabrese was sent over to work in London from the United States. And together we discovered and nurtured the business of derivatives. And this would have been around 1988, 1989. I mean, we stumbled into it in a way, but we rapidly found there was a business to be done. We dealt with shipping companies who wanted to hedge their exposure to bunker fuel, airlines who wanted to hedge their exposure to jet fuel prices, and other occasional consumers. We did a very small amount of crude oil business. Basically, that was handled out of the US office. But, we started a business. It worked well. Nick was, had been an MBA at Wharton and was much more comfortable with the financial side of it. Whilst to me, trading products and derivatives, in a sense, I knew them all. I had to polish up fuel oil trading, which I hadn't done for a while, but, we worked very well together and the business was tremendous. It started off very small, but profit margins were quite high and it gradually grew to the point where we had a reasonable sized book. And then Iraq invaded Kuwait, which was not a good time to be short jet fuel. So this would have been 1990, end of August, early September. And we were short a large amount of jet fuel, probably primarily hedged with gas oil futures. But I can remember Nick and I looked at each other and said, well, what should we do? And the one thing very clear to us was that we had to buy every single barrel of everything we could get our hands on. And
interestingly, we mentioned that in our book.
Yes,
Someone we interviewed told us that, quoted you as saying, I bought every single waterborne cargo I could lay my hands on.
Well, I mean, initially we bought futures. We bought Brent cargoes, in fact, because we started buying futures. The London markets closed at what it was, 5:30. Then we started buying things in New York, and it was very clear to both of us that we needed to overhedge. That we needed to buy more barrels, and they were going to be crude oil, than we were short jet fuel, to have a hope of coming out of this alive.
Nick, in those
And when,
days,
when, when you were in the derivatives business at this point,
Yeah.
I guess you were trading options as well as
Yes.
swaps and futures. So were you delta hedging your options and needing to,
Yes.
you know,
Yeah,
yes, you were.
I'd
Okay,
done
so-
quite
so-
a bit
so
of work
that's the
on
need.
option theory earlier. In fact, I wrote an options program for the International Petroleum Exchange when they introduced gas oil options, which we sold on floppy disks. But so
Nick, one more question. Sorry. In those days, how was the market for regrade? Where was the market in jet swaps versus gas oil?
no,
as
this was
you have
well
now?
before that.
This
I
well
mean, there
before.
were no over-the-counter derivative markets to speak of at that stage. They started to develop a little later. And, for example, I would have lunch with Dick Bronx once a month, who was then at BP, and, I would buy fuel oil swaps from him and so on, because his idea of where the forward fuel oil market was considerably below where I knew I could sell it to our shipping customers, for example. Quite a lot of what Nick and I had to do was try and work out where we thought the forward market was, or it ought to be. And I know there's all the talk now about how AI is changing the world, but the invention of spreadsheets changed our world. Before that, whenever I wanted to use a computer, I would write a program. I used to be able to program in 4 or 5 languages, and we used the first home computers to do things. We had, but then when spreadsheets came, everything became so much easier, so much simpler and quicker. And so we would run spreadsheets to try and determine where we thought forward prices were, and we used a combination of where we thought contangos and backwardations in the market, where crack spreads were. It was not entirely a science. I can remember one morning when Nick and I, we used to run figures separately just to make sure that there wasn't a stupid mistake. And he had his fuel oil selling price below where I had my fuel oil buying price. But nonetheless, we ran a decent, profitable and growing business. It went from the two of us to having another trader and 4 marketers. It was a very promising business until, frankly, Andy Hall lost interest. He lost interest in everything, really, bar crude oil trading, and at which he was remarkably successful and made many fortunes at it. And speculating, exactly.
And if I remember correctly, speculating that demand was always going to be greater and higher than people anticipated. So speculating from the long side.
Yes, he always wanted to focus on demand. He was very good at it and had a great capacity to take on large amount of risks. But he decided, I think, at this point that, products in general was a waste of time. And there was a big battle between Switzerland and New York over who should determine the fate of the oil business within Phibro, which Andy won. And really he lost interest in derivatives as having too many people for the income it was generating.
Nick, since before we move away from your great jet book, that time sounds remarkably similar to what's happening right now.
Oh, you
I don't
mean?
know how much you're still following the current situation, but Europe is desperately short of jet. Some trading companies have been in Asia being caught very, very short. The market's going through the roof. I mean, any advice you could give these young chaps trading it?
Uh, well, I mean, I found it a very traumatic time, the Q8 invasion, because it suddenly introduced something entirely new. I mean, I'm leery of saying any lessons we learnt then should be applied now. I
But
mean,
did you
I think
manage
it's
to
very clear that,
where?
the US is going to go in and, probably take over Karg Island and tell Iran, if you ever want to export oil again, these are the things you must do. I'm not entirely sure what that will do to the oil market. In some ways, I'm a little bit surprised how calmly the market has taken it, and I speak of more of the futures markets for forward delivery than the spot market.
And I am too. It's interesting, and these days, compared with back in the sort of first Gulf War time frame, we have perfect information available, and we have 24-hour communications, and you would think that people knowing more and knowing more directly about what's going on would create a greater sense of panic than perhaps back in the darker days, but it doesn't seem to have done so.
No,
And I wonder whether that's because we have seen geopolitical events in the last 50 years on several occasions, and they've all sorted themselves out. And people maybe just anticipate that, well, it'll just be the same again. It may not be, of course.
yeah, I mean, I think that's certainly part of it, that, reacting, and I think we're talking equities more than anything else, to geopolitics is a losing game. I mean, of course, the economies of the world are much less dependent on oil now than they were in the 80s.
And
So,
it's also a little bit the nature of the Trump, I was about to say Trump regime, the Trump administration, is that a lot of people, it takes a brave soul to go out and put a big position in futures market where he can flip, overnight, and just change his mind and just pull out or do God knows what. And I think, at least me talking to a few people, that's been the case. People are just scared to take any sort of quote fundamentally driven position out there when you just don't know what he's going to do. So-called taco trade.
yes, it is. I would say, though, I mean, nowadays I have a small career as lecturing on finance. And I gave my last series of talks in the end of January, and I told my audience that one of the things they could be certain about this year was that oil prices would go much, much higher. And I must admit, I was talking then because I said, if you look at oil prices in relation to gold or other commodities, they're undervalued at the moment. You can feel something is going to happen. Which it happened rather earlier than I'd expected it to, but I think oil prices were going to go up come what may this year. That had been written in. What happens now? I mean, it's very tough. Trump is incredibly unpredictable. I've no idea who really is in charge in Iran anymore and what they think of this. But I would say that there is sufficient U.S. armed presence in the Gulf now that Iran is not going to be allowed to close the strait for very long.
I mean, I think in many ways for the oil market, the most devastating thing would be if Trump were to follow what happened in the early 1970s and stick an export ban on US petroleum. Hopefully that's unlikely. But, such is the uncertainty as opposed to volatility that his actions create that one never knows.
No. I'd like to say I'm glad I'm not working, but I'm sure actually that, the trading companies are making absolute fortunes at the moment.
Yeah, they are.
Going back to your, so you were with Phibro for a certain length of time.
Yes.
Andy Hall then decided he didn't really care for derivatives. What was next, Nigel?
Well, I had some problems at the time as well in Phibro. I was a director of the London office, and then they moved the Swiss office to London, which the Swiss, well, all those working in Switzerland, almost without exception, hated. The head of
Peter Arbens around?
Peter Arbens had just retired, actually, and in fact died very shortly afterwards in a bicycle accident, poor fellow. Cycling is quite dangerous in the mountains. But no, they brought over Mike May as a director in London, and he and I could not stand each other. So I got an offer from Bankers Trust. They headhunted me, and I decided life would be better for me if I went there. So this was my first true occasion, really, of working for a bank. Although I worked in Salomon Brothers, Phibro Salomon, my contacts with the Salomon side of it were somewhat limited. It was an interesting time, to be honest, to be in London and Salomon. It was the Liar's Poker epoch. And, I got to know John Goodfriend and the like. So, but in terms of working, Merriweather too, actually, I must say was a less pleasant character than John Goodfriend. John Goodfriend was a real people person. I can give you an example. I used to cycle to work from Richmond.
That's a long way.
Well, 9 miles, I seem to remember. Maybe it's only 7. But anyway, and one morning I got in, and I would normally get in at 8 o'clock. And my plan was I would switch on my screens and the like, have a quick look, then go and take a shower, and then come back sort of at 8:30 and work would begin. And one morning I got in at 8 and the phone started ringing. I can't remember what had happened, but, at 10:30 in the morning, I was still sitting there in my Lycra cycling gear with 2 phones. And all of a sudden I became aware that there was cigar smoke in the air. So I looked round and there was John Goodfriend, who was the chairman of Salomon at the time, so quite an important person, certainly a lot more important than I was, And so he asked me, can I have a word? And I said, I'm really sorry, I'm just too busy, and went back to answering my phone. Anyway, when things quietened down, I found Goodfriend on the Solomon floor, having by this time changed into more normal clothing, and apologized for not being able to talk to him early. And he was very charming about it and said, no, it's nice to see people working. I really appreciate it. And, if we had more people who were too busy to talk to me, the company would be doing a lot better. The following day I got a note or something from Merriweather telling me that at no point was I to work in the office in cycling gear again. It was completely unacceptable. And that's sort of the measure of the 2 men.
There you go.
Excellent story. Excellent.
Lovely. Yeah.
So anyway, I went to Bankers Trust. which was probably the top derivatives bank at the time. I mean, Colin, perhaps you want to argue that and say, no, Goldman Sachs, Morgan Stanley were up there too.
No, I think you're right. In fact, Morgan Stanley, who obviously I know a bit about, we were late to the party in the vision of derivatives to the the hedging market and to the counterparties. We remained much more focused on the physical business for longer than Goldman, and certainly bankers and Deutsche and others got ahead of us in the early days, for sure.
I mean, bankers really was all about being clever, peculiar options deals and the like, look backs, knockouts. I mean, my business in their terms was very plain vanilla. There were good things and bad things about being at bankers. I mean, I learnt a lot. And one person I truly like to thank was the marketer who was working with me, Kathy Brady.
Oh, yeah.
Yep. I mean, we used to argue a lot, actually. I mean, perhaps for the pleasure of arguing, but I did something. We had a conflict at heart in the kind of customers we wanted to deal with. I mean, I wanted to deal really with customers who were consumers, producers, or refiners, so ones who had a natural business. And her brief was much more to deal with hedge funds or other financial counterparties. And I think I was rude to one of her hedge fund clients at one point who wanted to talk to me to discuss a trade I really didn't want to do. And I mean, I got her truly angry, and she said to me, "Do you know what your problem is?" Actually, I was pretty sure I did know what my problem was, because it was always either being arrogant or selfish. And so I was waiting to be told which of those two it was when she said, "Your problem is you don't have an interest rate background," which was absolutely right. And I made a big effort to get an interest rate background after that and to learn my way around the interest rate market, which had changed a great deal since I studied at university in the early 70s. But business-wise, in Bankers Trust, really we were destroyed by the Procter & Gamble issue, where Bankers Trust missold derivatives to Procter & Gamble on interest rates, and the bank suddenly became a shadow of itself, really, and very clearly was up for sale. So it made doing business on an ongoing basis very tough. And there were a lot of aspects about what the bank did, not just the mis-selling of derivatives, but I would say the general honesty of the bank, not only in dealing with customers, but in its own processes that I found very distasteful. So when it came...
I think...
Yeah.
Hard charging, I think, is the moniker that tends to be used when referring to that particular characteristic of some of the banks at that stage, right? Yeah.
Well, I'm not just at that stage. I mean, I'd say, banks are there to make money, and it's very clear that a lot of things they do are designed to bolster their balance sheet and profitability rather than those of their clients and customers. But I thought Bankers Trust was astonishingly dishonest at times. But anyway, we couldn't really leave because we'd been given large amounts of share options and other vested payments. And when Deutsche Bank decided it was going to buy Bankers Trust, everything vested, and I left and decided I'd really had enough of banks and decided to join Glencore. To, in some sense, go back to my roots.
What year was this again? Roughly.
I joined
Roughly.
Glencore at the very beginning of 1999. It was wonderful timing. It was a wonderful fit. And I ended up working for the best manager I ever worked for, which was Frank Destrabats, who I'm sure neither of you would know. But he was an excellent manager. He was very open to ideas. And the Glencore I joined was very backward in a lot of senses. It had an appalling lack of P&L management. The general accounting function was very weak. The traders were very limited on what risks they could take. Not that particularly anybody knew what risks they were taking. And I told Frank after 6 months that really, unless things were going to change, I didn't want to stay anymore. We were also in a horrible office in Wigmore Street with air conditioning that seemed designed to spread every single virus that anyone in the building had. And anyway, and Frank said...
in close proximity to the Pontefract Castle.
Very much so, remember, yes.
Which was full of Glencore and Chevron people.
Yes.
Generally speaking.
Yep, Phibro too. That's right.
Who were the top guys at Glencore at the time, Nigel? Who was the CEO?
Ivan,
of course, yeah.
Yep. And he had the various... it was... Glencore at the time was primarily a coal business, to be honest, run by Ivan from Switzerland. And then he had various deputies, and Frank was in charge of oil. And so Frank listened to me and said, okay, I accept what you're saying. How long will it take to change it? And I said, I can get everything changed in 6 months. And he said, are you sure? And I said, yes. And so he said, okay, do whatever you like. If you encounter any opposition, just come to me. So, we went from having P&Ls reported at best on a monthly basis to having them every morning on traders' desks. We went from people having their positions at best on a spreadsheet, if not a piece of paper, to in all the systems, trades were entered immediately, and it made a big difference. And we had the luck, really, that it was a wonderful time to be in the business too. So profits just started to rise year after year. We had the wind at our backs, as did every trading company at that time. We were not alone in this, but it was particularly noticed at Glencore because Glencore was quite a cash-poor company at the time. There'd been the split with Mark Rich. But suddenly we really went from, I suppose, a medium-sized company to being a large and profitable one, which led up to the IPO in 2008, I think it was. And anyway, Frank and I proved a great team. He rewarded me incredibly generously, and we both left at about the time of the IPO. Very, very much richer than we had been a few years before.
Perfect timing, isn't it?
Yes, give or take a year, it was perfect timing. we have China to thank for this in many ways, as they, just ended up buying everything from the period of sort of the mid-90s through to the first decade of the millennium.
That's one of the moments in the oil industry that I'll never forget. I was in Singapore at the time during the IPO, and I remember there was on the front page of Financial Times, and then there was a story inside, and some of the people that I knew from Glencore from when I left in year 2000 for Singapore, and their net worth, I nearly fell over. It was absolutely astonishing. I mean, we're talking billions.
Yes.
Some people that traded with me and had, we had beers together. It was incredible.
I joined far too late to be in the billionaire category, but
I'm sure you've done all right.
I have no complaints at all. I mean, certainly, I had a fixed idea of how much I thought I wanted to retire on, and I ended up with double that. So I retired.
Hence living in Andorra.
No, I went to Argentina. I'd been given country responsibility for parts of South America by Frank, and I always enjoyed going to Argentina, and I had this yearning in a way to go back to university. So I made a quite stupid decision to try and study Spanish literature at the University of Buenos Aires, not being able to speak Spanish, which proved too much for me, actually, and I gave up after just under 2 years.
You probably speak Spanish.
Por supuesto.
Argentinian Spanish. Are you a Pojo man?
Well, I'm living in Andorra, where the official language, in fact, is Catalan, but the most commonly spoken language is Spanish. It doesn't help. So I've cut out speaking Argentinian Spanish, and as far as possible.
So if we maybe just think about, we're probably close to wrapping up time, Addy. I don't know whether, Nigel, just to wrap up, you could think a little bit about if there were a couple of people over the course of your career and a couple of events over the course of your career that you consider to be seminal in the development of modern oil trading. Where and who would you hit on?
Yes. There was the Metallgesellschaft failure in 1993, I think, which had quite an impact at the time, and was the equivalent of the long-term capital management failure for the oil market. But I'd say, the biggest single thing, I think, really, I'd have to say is the tremendous success that Vitol, Ian Taylor, Bob Finch had. If I think back over the latter part of my career, this is something Phibro should have done, although Andy Hall was tremendously successful. Really, had he had the vision for the company, then Phibro would have been up there rather than an increasingly insignificant part of US banks. But Glencore did tremendously well. It went public. But I think the great success story is the genius of Finch and Taylor at Vitol and what they have done with that company. An incredible success story. With Glencore and Trafigura behind that. But as you mentioned several times in your book, which, I promise you I did read twice in preparation for this.
Thank you.
We lived through a very fortunate period. We had everything conspiring to give us a sustained bull market. Firstly OPEC helping us along, and then China powering us ahead through demand. And you didn't have to be a genius to become very rich. I mean, it helped being clever, but we were very lucky to be in the right place at the right time.
Yeah, no, that's right. I think Rod Gavshon, who I quoted in our book, said we were very, very fortunate in the business we worked in, or should I rather say the business that paid us.
An industry that we were paid in. Yeah, that was.
Yeah, I mean,
Well,
and I think
in
book,
contrast to some of the people in your book, I mean, I worked very hard, and I would say the vast majority did. It was not endless lunches and, nights out. I mean, of course they happened, and IP week, there are certainly a few incidents I'd rather not talk about, but I mean, I mostly remember working remarkably long hours, day after day of getting in at 8 o'clock and not leaving till NYMEX closed or was about to, and phones endlessly ringing, and decisions to take all the time, and a P&L every morning which told you whether what you were doing made sense or not, and no excuses to offer.
And I think if you look back, those who treated the business with a seriousness of purpose were the people who, at the end, really succeeded, generally speaking. There were the Sir Lunchalots as well. The folks that knew a good red wine when they found one, and knew every restaurant and club in Mayfair, but they were not, at the end of the day, typically the people who did best. Those who were serious about the business and worked hard. And we all work hard, you're right.
Yep.
Well, Colin, we're way over time, but for a very good reason. It's been absolutely fascinating, Nigel.
Okay.
Well, I'm sure we'll have to have you at some stage
I have
again.
a long list of things that I still meant to talk to you about, but
in which case we will have you talking again. In that case, for sure.
But it's been a real pleasure.
Thank you very much. Really, really appreciate it.
For us as well, and it's lovely to reconnect after all these years and hear your stories and your take on the life that we all led.
Very good. Okay, thank you both.